This conference will now be recorded.
Okay, so in the last session, we were talking about asset legacy balance upload for the current year acquisition. We understood how current year acquisition will take place in SAP for the data migration, especially during your cutover activity phase. Now, same example we will take, but with it, the different acquisition date of last year. So what I'm going to do is, I'm going to take the same example and I think we have not yet calculated the figure here. I'll take the first example. I'll come down. This one. I'll write asset legacy data upload for prior year acquisitions. Asset legacy data upload for prior year acquisition. As we understood, whenever you talk about prior year acquisition, we are talking about asset purchased in the previous year. Asset purchased in the previous year. Previous year, according to you, is the go live before year. So whenever you're talking about asset upload, you need to first understand in which year are we going live. If you are going live in 2023, any asset which is purchased until 2022 is your prior year acquisition. Any asset which is purchased in 2023 is your current year acquisition. Now, according to that, our acquisition year here is 2021. According to this acquisition year 2021, this is part of a previous year or prior year acquisition. Let us understand how this prior year acquisition will take place in SAP. For this, what we will do is, let's try to do the basic depreciation calculation. Same logic, same activity which we did for current year acquisition. What I'll do, I need to add two more points in this. Depreciation method, straight line method, and depreciation posted in current year, depreciation posted till last year, and then current net book value. Point number one, what I'll do is asset purchase date, I'll take here. Asset purchase date is, what is this? March 15, 2021. And then I'll put year. When I put here, I am writing simply asset purchased in 2021. I will put 2021, 2022. We are currently in 2023. I'll put 2023. Point number one that you need to understand here is asset is purchased in 2021, but asset is not purchased on the day one of 2021. Asset is purchased in 21, but not on day one, which means in the year 2021, asset is partially used with us. We've used asset partially in the year 2021, meaning here depreciation is on pro rata basis, not for the full year. You have to understand number of days or number of months the asset is used with us. Now here I will say usage. Here I will say partial. 2022 is in between your go live and purchase date. It is always full year. You've used fully in 2022. In 2023, again this is partial because you're not going live at the end of the year. You're not going live at the beginning of the year. You are going live at the middle of the year. So until the go live date, whatever the date or whatever the month that you consider is not the full year. If it is not the full year, definitely it is your partial. If it is not full year, definitely this is called as partial. Once you list out the partial, we need to make sure how many days or how many months asset was used in this particular year. Accordingly, depreciation has to be charged manually. First thing, I'll put depreciation. Same logic. When you're talking about depreciation, you are going to first represent 10% straight line method. but I think we changed the setting from 10% to 15%, I believe. But let me look at the setting because I don't want to change config now. I'll go to AFAMS. Multi-level method is where your depreciation percentage is updated. Chart of depreciation, I'll put 9BIN. This is slow. But what was our calculation last time? This is 15%. Okay. This is back. And here if I go to the multi-level method, 15%, I'll double click on this level. I've taken 15%. Base value what I took is 01. 01 is on acquisition value. On acquisition value means it is a straight line method. If you are calculating on net book value, meaning this is your WDV method, since it is 01 straight line method, 15% is what the scenario we are considering. Let us proceed with the same setting, 15% straight line method. So what I'll put, this is not 10%, 15%. When you practice, make sure you practice with the 2-3 different depreciation methods, 2-3 different depreciation percentages to understand you are clear with the calculation part. Now,
Sir,
first
sorry to
point,
interrupt. Sir, sorry
yeah,
to interrupt here. Remaining value in this SLM, does it impact in multi-level method? The remaining
yeah,
value.
no. Until the value becomes 0, it keeps on applying the percentage.
Okay.
Okay. Yeah. So here what I'll do, first thing, the same logic. I am going to calculate annual depreciation. Now, down below I'll put asset purchase date. Here I'll put purchase value. What is our purchase value? It is 70,000. I'll put asset purchase value as 70,000. Now let me plot the numbers here. Depreciation per year. It will be 70,000 multiplied by 15%. 10,500 per year depreciation. Next one, depreciation per day. This one, it will be 10,500 divided by 365 days. And I'll take two decimal only because we are using for INR. According to INR, only 2 decimal points. I'm taking only 2 decimal. Next one, you have to use the asset total depreciation. Now in 2022, asset is used fully. So depreciation I'll put here. Depreciation in 2022, I will take 10,500 because the asset is used for the full year. Since asset is used for the full year, I am straight away taking 15% of the asset value, which is your 10,500. In the year of 2021, asset is used partially. I need to charge only partial depreciation for the year 2021. Now how I will charge? I need to understand how many days asset was used here. For that, what I'll do, I'll plot the days and the numbers here. I'll simply put January, February until December, and January you will have 31 days, February 28 days, March 31, April 30, May 31, June 30, July 31, August 31, September 30, October 31, November 30, December 31. Now in the year of 2021, since asset is purchased on 15th March, so what I'll do, March it is purchased on 15th. So what I'll do, I'll calculate from 15th until 31st. So if I deduct 31 minus 15, I'm getting 16 days. So is it 16 days or 17 days I need to consider? I think 17 days, right? Minus 14 I should do. Is this correct?
Yes, sir.
Because
17 days.
15th I should include 15 also, so that it will be 17. So the number of days that we used in the year 2021 is 292 days, because from March it is there till the year end. So I have to take the respective month from April until December, the total number of days in each month, along with the March month only 17 days on pro rata basis. Overall days that I am getting is 292 days. I am going to put 292 days here. Here I'll put 292 days. Here this is 292 days. Similarly for 2023, it is partial. When I say 2023 partial, you need to consider until your cutover month. Your cutover month is November. So I have to consider number of days until November here. I'll put these 2 days here. January, February. I'm not going to consider December. If I do a total of all this, it is 320 days. So we've used 320 days here. This is your
March month.
Sir, March
You have to
month.
change the 17.
So March will be the 31st, 31 days. No?
Yeah, correct. 31 days here. Now this will become 334 days. Correct, right? So it will be 334 days here. Now here we need to identify the depreciation. Now here we know that 292 days multiplied by per day depreciation is this much. For 2023, 8,400 is the depreciation. For current year, you have used 334 days multiplied by 28.77. It should be this value. I'll take 2 decimal, and if I do this sum, this is what I am getting. First point, what I'll do is I'll segregate this into 2 portions. This is one portion, this is the other portion. Now why I am segregating this is 2023 is current year and this is prior year, this is also prior year, in short previous year. When you are calculating depreciation, you will have to put depreciation posted till last year. Depreciation posted till last year is nothing but 8,400 plus 10,500. Till last year means until 2022. This is 18,900. Depreciation posted in current year. Current year means 2023. In 2023, it is 9608.22. Now the total net book value at the end of November, which means the value that should bring into your balance sheet as asset, is your total asset value 70,000 minus depreciation posted in current year minus depreciation posted until last year. It should be 41,491.78. This should be the value, and you should find another value called depreciation for December, because December is the last month in current year. For this, if I find out the depreciation, 31 days multiplied by, what is your per day depreciation? 28.77.
Yeah, sir.
This should be the depreciation that system should record in the month of December after uploading the data. This is our value that we have to see for the month of December in SAP. Once this value you are able to see, then your calculation portion is correct. Now let us do how this value is brought into SAP as part of legacy data upload in prior year acquisition scenario. First point, as usual, AS91.
Sir,
Yes.
December value was not deducted from that netbook value.
No. This is until last year. Until last year cutover month. We have taken until November only, right? December I did not take here because December is not part of legacy system. In legacy system, you will receive a balance as on November 2023.
Okay. Got it.
Okay. Now, first point what we understood was create the legacy asset. For legacy asset creation, AS91 in both the scenarios, either current year acquisition or prior year acquisition, legacy asset is always created in AS91. Let me put AS91. Asset class is this. Company code is this. Enter. And description, what I'll do is I'll put prior year asset legacy upload. Just for the identification purpose, I am writing like this. Prior year asset legacy upload. Okay, then you need to put capitalization date. In our example, capitalization date is 15th March 2021. Go to SAP 15/03/2021. Enter. When I put this, if I scroll down, automatically system is showing capitalization date, acquisition date, and then acquisition year 2021 fiscal year, period number 3. Go to time dependent data, input the cost center, straight away go to depreciation areas, make sure depreciation keys are properly assigned. This is 9BSL straight line method and 9BUL useful life method. Start date is automatically taking from here. Expired useful life is 1 year 292 days. 1 year 292 days. Did we get 292 days here? In first year we got 292 days. Expired life is 1 year, and then you have to consider only previous years. Expired means previous. Current year is not part of expired. Asset accounting calculates expired year only after completing the financial year or fiscal year. Currently we are still in 2023, so system is not going to consider 2023. According to 2022 end, it is 1 year 292 days completed. That is what even we got. 2022 full year, which means 1 year. In 2021 292 days. Even your system is showing the same figure. Expired useful life 1 year 292 days. Press enter, click on save. With this, asset master data is created. What we did, asset master is created. Press enter. Asset number is
Sir,
1 all zeros 4. I'll take the questions at the end so that will not get distracted. Okay, make note of your question or put it in the comment. I'll read and then I'll answer your question. I'll take this value, this asset number. Next one we understood straight away we need to post the asset legacy upload using ABLDT. What I'll do, I'll go to ABLDT. In the last session we understood ABLDT we will be using for prior year, AB01 we will be using for current year. I'll go to ABLDT. In the ABLDT, give your company code, give the asset number, proceed forward. And we have to give the values here, acquisition value, all this number we need to give. But one point that we'll have to do here is we need to also calculate figure related to the useful life method. We've calculated only for the straight line method. Useful life method also we need to calculate the numbers that we will quickly calculate. So what I'll do is I'll quickly calculate useful life. For that, depreciation per year will be 70,000 divided by 5 years. I believe we are using 5 years. Let me verify once again. AS93 display legacy asset. If I go to depreciation areas, it is 5 years. Okay, now I'll go to Excel sheet. If I put 5 years, this is what I got. Per day depreciation will be this divided by 365. And I'll take 2 decimal only. And next one, here I'll plot the number. What I'll do here is, this will be 14,000 here. And this will be per day depreciation multiplied by 292 days. And this will be 334 days. 334 days multiplied by this. Same thing, I'll split these two here and then I'll take this separately and I'll have to do this. So what I'll do next, here acquisition value is 70,000. I'll put 70,000 here. INR 70,000. 70,000 equivalent dollar you have to put. So what I'll do to get the equivalent dollar, I'll go to EWCT exchange rate simulator. I'm going to put INR to dollar. As on current date, I'll put 70,000 INR is equivalent to $864.20. 864.20. I'll put acquisition value 864.20 and it will be the same figure here also. Sorry, 864.20. INR dollar we have put. Next one you need to put something called accumulated ordinary depreciation posted. Always remember, whenever you are talking about accumulated ordinary depreciation posted, it is until last year. According to our scenario, until last year is 2022. For this, if I take 2022, these 2 years, it is 18,900. I'll have to take 18,900 here in INR, 18,900. And for this 18,900, I need equivalent dollar. $18,900. When you are in the real project, you will simply put a formula with the exchange rate. Automatically, all the numbers will get updated in your Excel sheet. 18,900 is 233.33. I'll put this 233.33 here. 233.33. Sorry. 233.33. And according to the other accounting principle, for the first 2 years it is 25,200. I'll put this number here. INR will be 25,200 and the 25,200 equivalent dollar we need. I'll go to SAP again. 25,200, if I take equivalent dollar, it is 311.11. I'll come here. 311.11. This is the accumulated ordinary depreciation. Next one, there is something called ordinary depreciation posted. You can drag and drop the column from here to here, or if you are comfortable with this, you can save this as a layout so that next time when you open this screen, it will appear in the same position. If I click on save layout, I'll put my name, default. Okay, so that next time when I open this screen, I will see the format in the same way. Now ordinary depreciation posted, this is until your cutover month, which means November month. In INR, until November month, whatever the depreciation that is posted is 9,608.22. I'll copy this 9608.22. I'll put this here. I will paste this here. And this 9608.22 I need equivalent dollar. For that I'll put this number here, 9608.22. This is coming as 118.62. I'll put 118.62. And next one, according to this one, this figure is 12810.96. Copy this number and I'll put this number here. And this ordinary depreciation, I'll place this number here, 12810.96. Now this 12810.96 I need equivalent dollar. Come here, 12810.96. And this is coming as 158.16. One 158.96, 96 or 16, 158.16, enter. Okay, these are the numbers that we are updating. First, what I'll do is, for the safe side, I'll copy this number, because if we get any error and all, again I have to type manually, which I don't want to do it. What I'll do a Control Y. I'll copy these figures, Control C. I'll put this number maybe in another Excel sheet. So that in case if you get any error, again we do not have to make any adjustment. Straight away we can copy paste figures from here. After placing this number here, come back to this screen, press enter and go to this document simulate option on the top left. Let's see what is going to happen, whether it is going to simulate the entry or we are receiving any error. Let us verify. It's only giving warnings, which means there are no error messages. Entry is fine. This is the accounting entry that system is going to generate when you upload legacy asset with respect to prior year acquisition. Asset accounting is debit, accumulated depreciation is credit, Now takeover account is on the credit side. This is your depreciation for the current year. Takeover for the depreciation for current year. Okay, now this accounting entry you have to remember, because in the interview people will ask the accounting entry. In the interview they will ask accounting entry because everybody will tell the process. It's easy to say create asset in AS91 and then upload the balances in ABLDT, then it will complete. Then they will ask you, can you explain the accounting entry that system is going to generate? If they are still not satisfied, they will ask you to explain with some figure or with some number, some dummy number they want you to take. They want you to explain with the figures how system is going to convert assumption numbers, not accurate number, some assumed number. Now here it's posting correctly. This is according to IFRS. If I change the accounting principle to other one, as per accounting principle, Indian accounting standard, this is how the entry is coming. If everything is fine, data is validated, go to post the entry. Okay, it has generated two documents because each document is representing one ledger. Each document is representing one ledger to ensure that your parallel valuation concept is satisfied. Once this is done, go to Asset Explorer AW01N. Enter. If you look at Asset Explorer, what we need to do is we have to see what is happening in this screen. Point number one, asset acquisition value 70,000 is coming, which is perfectly fine. Now this is for the current year 2023. For current year 2023, total depreciation will be 10,500. And if you see, full year depreciation is 10,500. But until November, it is only 9608.22. And if you see here, until November, it is posted depreciation is 9608.22, and this amount is annual amount. If you see this 2023, this is full amount. If I go to posted value here, we are supposed to get one figure here. Now you see this is legacy data transfer. Until November month, it is 9608.22. According to the depreciation calculation logic, SAP is telling SAP is telling for the month of December, depreciation to be processed is 891.78. Our manual calculation, what we got? 891.78. You'll have to get exactly the same number, only then your calculation, your posting, everything is correct. If numbers are not coming, meaning your logic, your calculation, your approach is not correct. Now when you understand the logic, how system is behaving, the same logic will be implemented for all the asset, because system is going to put the same formula, system is going to put the same logic. And if you are also going with the same formula, same logic, no way that you will get incorrect data uploaded of fixed asset. As long as you are good at the calculation part, as long as you are good at the understanding part, there is no problem that you will face during the asset migration. Remember, you will be having a lot of assets and you need to make sure you are clear with the calculation part. This is all about your asset data migration with respect to prior year acquisition. Now if you see the way we understood current year acquisition, the way we have now understood prior year acquisition, it is very simple. Did you find anywhere it is complex? Anybody felt it is complex, tough, or it's easy?
It's easy. Okay. It's easy.
Right, so everybody will be asking you this question in whatever the interview that you face. This is a mandatory point, mandatory question. Make sure you understand this in a different way, so that when you are explaining, you will be able to explain in a proper way. And here I'm not writing the steps purposefully. Now I want you to list out the steps. For the current year acquisition, this is what we did. For the prior year acquisition also, you have to do the same thing. But this is one time activity. Few settings are one time activity. If I put this legacy upload process for prior year acquisition. Legacy data transfer date, this is a one-time setting. Offsetting account, this is also one-time setting. Create legacy asset master, common. Post acquisition value. Post, this is not only acquisition, post acquisition and depreciation value. This is not AB01, this is ABLDT here. Other things, it is the same. For this, it is not required. For prior year acquisition, execution of depreciation for the cutover month is not required. For current year, you will have to do it. Or you have to run this, you have to post depreciation using ABLDT. ABLDT, you need to put figures manually one by one. We don't use it. You can straight away run the depreciation for period number 11. Automatically, all the asset depreciation will be updated. Now, these are the only steps. Now, what you need to do here is you have to update the accounting entry also. Which accounting entry system is going to generate when you put legacy data upload for current year acquisition. Similarly, accounting entry for legacy data for current year acquisition. With this, your legacy data upload for fixed asset current year, prior year is completed. Okay, so I'll share this Excel sheet now. What I want you to do for your practice is take a different asset, take the same format, put different asset name, take different number, different date, different value, take different percentages according to the configuration that you maintained, find out the depreciation values, make sure you are able to upload the number. And when you are working on the Excel sheet, make sure you will do all the calculations in a systematic manner. When I say systematic manner, put every columns here. Let's say depreciation or purchase value, depreciation until 2022, depreciation for 2023, so that you don't have to do all this work again and again. Simply you can place the number, use the Excel formulas, copy paste, every number will get automatically calculated. By this, you are also practicing the Excel work. At the same time, you are practicing the calculation logic in SAP. When you bring this number into SAP, you are going to ensure whether your calculation part is correct or not. You don't need to ask somebody to verify. By looking at the calculation, by looking at the SAP, you will automatically understand what you did is right or wrong. Okay, so I'll stop here today. Any questions you have on this, I'll answer in the tomorrow's session. Okay, I have some other work now. So I'm stopping the recording now. Any questions that you have on your practice on this topic, I'll answer in the tomorrow's session before start of the session. Okay, good night.
Good night.
Yeah.